I've never been in a market that is up, has appreciated, and our strategies are down. That has never happened before. And in fact, the disconnect is even more strange.
How's it going, everyone? And this is Daniel. In this video, we're going to be talking about Tesla stock. We're going to talk about what to expect for Tesla stock moving into the next few days, the next few weeks at the end of the year, what to expect for Tesla. We're also going to be going over why Cathie Wood is surprised and shocked that her fund is actually underperforming significantly compared to the overall stock market, why she is doubling down on her high conviction stocks like Tesla, Roku, Shopify, etc. We're going to talk about it in detail in this video coming up. So as you can see over here, we have a Tesla stock that is sitting at $1,017.03 for the past 7 days. We were looking pretty good. We were up 1.59%. We have a slight big red day that happened last week when Elon Musk sold more than 900 million shares. We went all the way from a high of $1,070 all the way to below $1,000 to $986. And of course, this sell-off was happening because of Elon Musk selling. But so far, we're sitting at Elon Musk around 65% of his shares sold. So he only has 35% of his shares remaining to sell. So that is pretty good. So potentially he can be done selling Tesla shares by the end of the year. So that's going to be fantastic for Tesla. Usually the overall stock market tends to go higher at the end of the year, and that could potentially take Tesla stock to the upside. Of course, for all this to happen, we need to actually get Elon Musk finish selling his shares. By that time, we have like 2 to 3 weeks remaining for us to reach the end of 2021 and potentially get the Santa Claus rally. But in the short term, we have to be watching out for Tesla stock to slowly trend higher and maintain this $1,000 price mark right around over here, because it's acting as a very strong support. Later on in the video, we're going to be looking at the detailed technical analysis, but if we can stay above $1,000 and continue to go up, I believe we can definitely continue to go higher and higher by the end of the year. Now let's talk about exactly why Cathie Wood is shocked and surprised that her fund is actually underperforming the overall stock market. She's well known for predicting the massive move for Tesla stock and still anticipates a massive move for Tesla for the next 5 years. Their price target is $3,000, but unfortunately right now, her fund is definitely underperforming a lot. So far this year, we have the SPY, or the overall S&P 500, is above 20%, and her funds, the majority of her funds, are down. So she's going to explain to us in this video, why she is shocked and surprised that this happened, why she created her new transparency fund. We talked about it on our previous videos that she created a new transparency ETF. So she's going to go over in detail and explain to us what to expect and why she's kind of surprised that these overall things are happening, and then after that, I'm going to be coming up, and then we're going to be talking about, the Tesla short-term price prediction. We go over the technical analysis for Tesla stock, what to watch out for coming up.
Look at your overall flagship fund, or all of your funds. One thing that I think people are looking at this year, they've had a lot of struggles. Some of the stocks are down big. At what point do you rethink your thesis for some of these stocks? We see you buying into some of the pain, but for not every call works out. So some of your investors, I think, want to know, is there a time you throw in the towel? Do you have an example of that, or are you looking to do that with any stocks you currently hold?
Yes, what you see us doing, especially during periods where our style is out of favor, which is very unusual in a bull market, by the way, highly unusual, and we can get into that in a moment. But what we usually do is consolidate our holdings towards our highest conviction names. And a lot of commentators noted earlier in the year, during the February through May washout in the innovation space, that we sold our Chinese stocks. Now, in the flagship fund, we moved completely out because we are consolidating or concentrating our portfolio towards our highest conviction names. Now, that turned out to be a very good move. And we've seen that concentration work many times where we've lost some conviction. We still like a stock, would normally sell it, but we like these other stocks better. We have much more conviction in these other names. And those are the names in our top 10. So the Tesla, the Roku, Teladoc, Square, Shopify, and so forth. So that's when we make a lot of those moves. Of course, you saw us sell Zillow recently. It was a little bit of the same. Our style, it has been under pressure. Zillow does something most unexpected, changes the strategy that we thought they had been working towards for 10 years with Rich Barton, the founder of the company, coming back around to execute on this Zillow offers. And then they pulled out. They realized they didn't have the right DNA for it. And so we might have known that ourselves, I suppose, but it involved artificial intelligence. We thought Rich Barton was right there, was on top of it. So we did sell on fundamentals, that particular name.
Talk to me when you talk about investing in some of your highest conviction names. It does create concentration risk, not only with a single stock as much as 8-9% in a single ETF, but that name repeats itself in many and several different ETFs. How are you thinking about concentration risk when things do move to the downside?
Yes, what we are usually doing in a bull market, and you saw us do this last year, is as a bull market extends, we actually diversify our portfolio more and more, putting in names like the FANGs, which we consider more cash-like instruments in our world. We're much more focused on the innovators of the future. So you will see us do that, and that's what we use to concentrate our portfolios during downturns. Now, why do we think it's such a good idea to concentrate during downturns? Because most of our counterparts are doing the opposite. What they're doing is selling our stocks. Our stocks either are not in indexes or they're very, very small parts of indexes. And so when traditional asset managers are managing their portfolios in a risk-off situation, they're diversifying to get closer to their indexes. They're buying index stocks and they're selling our stocks. So we are there to pick up the pieces. And it usually works out very well. I will say that this risk-off period, which started in February and is still in force, is a very unusual one for us. I've never been in a market that is up, has appreciated, and our strategies are down. That has never happened before. And in fact, the disconnect is even more strange when I look at the up rounds taking place in the private world when it comes to innovation. Nubank comes out today. I think it had an up round this year that doubled.
Sorry for interrupting. Do you then change your strategy? If you've never seen this before, where there's an appreciation, but your strategy isn't working, do you change your strategy?
We have a 5-year investment time horizon. Our strategy is our strategy, and we believe that truth will win and in the end. So we think the opportunity in our strategy is huge right now. In fact, rarely in my career have I seen our 5-year projections for returns, compound annual returns, hit 40%. We believe, based on our estimates, now they could be wrong, we don't think so. We think we have the best research when it comes to innovation in the industry, very high degree of confidence as it is centered around Wright's Law. Based on our very disciplined research, we expect a compound annual rate of return of roughly 40% over the next 5 years. That's a quadrupling. At the peak of our strategy in February, that number was 15%. That is our minimum hurdle rate of return. When we go through a period like this, of course, we're going through soul searching, saying, are we missing something? And we double down on our research and we double down on our modeling. What you should also know is to get to that 40% compound annual rate of return, we assume massive multiple compression from today's levels. If I can just finish, sure. One of the reasons our multiples are so high right now is our companies are investing aggressively to capitalize on the 5 innovation platforms involving 14 technologies that we believe are going to scale exponentially during the next 5 years. And so we assume that the valuations are going to compress to FANG-like valuations. So it's a serious compression of multiples assumed, and we still get to that 40% compound annual rate of return.
As you can see right here, we have a Tesla stock that's sitting at $1,017.03. And we are holding strong this $1,000 level pretty strong. So every time that we go below $1,000, the bulls are coming in and buying in strong. However, when you look at the volume is actually going down, unfortunately, for Tesla stock. But however, we're getting closer to the holidays. Usually, there's not going to be a lot of volume coming in because people are going for the holiday breaks and etc. So that is expected. But the main thing that we've been watching out for next week, of course, is Elon Musk selling his shares. So if he can definitely sell the majority of his shares next week, and we only have 35% remaining, and he gets done with selling his shares, we can definitely consolidate and start to go higher and higher. So the short-term price prediction for Tesla stock is that we might stay between $1,100 and $950 for the next upcoming week. And if we can get more of Elon Musk shares fleshed out, then we can get closer for him to finish selling, and that is definitely going to finalize all of the volatility for Tesla stock in the short term. So that's going to be the price prediction for Tesla stock for the next upcoming week. Of course, if Santa Claus rally happens, if Elon Musk finishes selling his shares by the end of the year, we might see Tesla stock going above this $1,100 price right around over here. So that's going to be the prediction for Tesla stock. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you want free stocks. Check out the links in the description box below. But I'll catch you guys on another video. Have a wonderful day.